My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. It's my job, not just to entertain, but to educate, teach. Put days like this in context. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. What's the fine print? After a day where the president reached what he's calling a substantial phase one trade deal with China, allowing the averages to explode higher, Dow surging 320 points, S&P leaping 1.09%, NASDAQ pulling 1.34%, we need to know the deets before we can finally stop worrying. And that's how we can't really do this job until we stop worrying. At the moment, we still don't know much. We're getting some substantial agricultural purchases, some intellectual property safeguards in exchange for a pause in the tariff rollout, including a suspension of next week's planned tariff increases. I don't know. I mean, some mumbo jumbo about not calling them a currency manipulator. Wow, it was really shaky. So that's why it wasn't enough for the market. It was hoping for something a little less preliminary. Investors also wanted some leniency for Huawei, the big Chinese telco company, but Huawei wasn't part of the deal, so stocks pulled back dramatically in the last half hour of trading, with the semiconductors leading the way down. They had been explosively higher almost all the session. Without a Huawei deal, owners of the semis, among other techs, rationalized that maybe the deal's just a sop to farmers. The president says we are nearing an end to the trade war. I will believe it when I see an end to the joint ventures that suck the life out of our companies and abandon stealing our intellectual property, among other particulars, including the end of flooding our country with fentanyl. Hopefully, though, as we learn more, we'll be able to focus on earnings season next week through the lens of sales and profits, rather than just tariffs and trade restrictions. Other than continued negotiations with China, what's the game plan for next week? Monday, seemingly quiet day, remnant from the years when the stock market still closed for Columbus Day. Oh, I love those days. But we should hear more about a possible breakthrough in Brexit negotiations, an upside surprise for most of the session. At this point, any deal is going to be treated as good news because it will finally put an end to the cloud of uncertainty that has been hanging over Europe literally for years now. Tuesday, we start hearing from the major banks. Important day. JP Morgan, Citigroup, Goldman Sachs, Wells Fargo, each has its own story. I bet JP Morgan will talk about healthy loan demand, corporate finance supremacy, fortress balance sheet that just might allow for a discussion about a dividend boost. Citigroup will be explaining its trading revenue stream, probably disappointing, versus the annuity stream, not disappointing at all. The latter is actually why people like the stock. That, and it sells at around book value. We want to know how much stock Citi's bought back. Hopefully they'll greenlight returning for more capital as shareholders. They are buying back a huge amount. Goldman, my alma mater. I expect them to tell a good story about solid earnings from mergers and IPOs. No longer that episodic trading stuff. But the thing I am most interested in is Apple. Goldman's behind the Apple credit card, even though, of course, the ad says Apple, not a bank. Well, the bank that's involved with servicing it is Goldman. How much money has it brought in? What's it worth to the franchise? I'm betting the news will be good, and it could boost the value of the entire enterprise. As for Wells Fargo, the new CEO, Charlie Scharf, who comes from Visa and Bank of New York, Mellon, now has an opportunity to lay out his vision for the future. Although, given that he just was appointed, I don't know if we can expect any major revelations. A lot of people believe Charlie will be spending a lot more on technology so that he can cut overhead dramatically. I don't know if he's ready to play his hand just yet, but that's what I'm betting. I think the stock's very intriguing. I think the stock's worth buying. Now, the banks had a monster move today, which makes them harder to recommend going to the earnings. The pattern here is that we tend to get profit-taking after the initial excitement for a number that comes out. A headline number gets people juiced, and then the stock sells off. I do not expect anything different from this, or this. Although this one, again, which my Charitable Trust does not own, but is very intriguing, is the one that I think that people are going to start saying, you know what, the worst is over. We also get results from two key healthcare companies, United Health and Johnson & Johnson. Now, last time UNH reported, the numbers were good, but it didn't matter because everyone was worried about Senator Elizabeth Warren, who's running on a platform of single payer that would effectively put companies like UNH out of business. This time, Wall Street's still worried about Medicare for all. But yesterday, UNH was hit by a big downgrade. It knocked the stock from 222 to 217. It was a little earlier, before market trading, it was around 215. The stock has since come all the way back. I'm thinking that maybe that's saying that it's got a solid floor. J&J is no longer an earnings story at all, and it should be. It's got a fabulous pipeline. It's got great sales, got great management. But it's become a legal story. There are huge lawsuits over carcinogens in talc. There's opioids, harmful side effects from Risperdal. That's a big antipsychotic drug that they've had for years. We own J&J for the Charitable Trust, which you can follow along by joining ActionAlertsPlus.com club. And I got to tell you, it's become pretty discouraging for my trust. I'm starting to worry there's just no end to the headline risk or the real risk of gigantic losses from these lawsuits. But investors took heart just today when Bernstein, a fabulous research firm, published a piece arguing the losses will be contained, and the stock has already baked in these negatives. I am not so sure. I expect there'll be more losses, and I'm not happy with our position in J&J. I know that there's a restructuring with Purdue coming up and opioids. It's just so much risk. But if Bernstein is right, and the worst may be behind us, give or take I'd say 5 points, it can go down to 127 maybe. I don't know. It did jump $2 on the upgrade from Bernstein. I thought there was some relief in the stock, but maybe I'm kidding myself. Also on Tuesday, we got an important analyst meeting from Workday. And this company we've had on many times. It's the cloud-based payroll software play. The whole cloud cohort exploded higher today, in part because SAP reported a terrific quarter, 38% growth rate in its cloud business. There have been some concerns lately that the migration to the cloud has been slowing, something we hear every time these stocks sell off. S&P made it very clear that's not the case. While Workday roared today off the SAP, I bet you this thing's not done. I think it has more room to run. I would buy it ahead of this analyst meeting. Business is very strong. Wednesday, we hear from Bank of America, which has reported 2 great quarters in a row. And each time the stock did absolutely nothing. I'm sure there'll be a lot of hand-wringing about how much money can be made with this ugly inverted yield curve, although it got a little better than it did 3 weeks ago. I think that Bank of America can earn plenty of money. Still, this stock seemingly has been stuck in the high 20s, low 30s for ages. Really much more like, say, 30 and change, 29.30, 29.30, drives me crazy. And we're still waiting for big institutional investors to get behind it. I bet Bank of America could break out of this trading range. If JP Morgan reports a good number the day before, that is the best analog. If they're good, this one, if this is good, look for this one to be good. This sends it up, that goes up. That's the linkage between the two. Now, IBM reports after the close. We need to know what Red Hat's doing. Remember, they bought Red Hat recently. Without specifics, the stock will continue to languish. And then the most controversial stock of the week is Netflix. It's a stock that's become difficult to define. If you own Netflix, you're making a leap of faith that management can still say it welcomes more competition rather than being hurt by all these new direct-to-consumer, over-the-top opportunities. Now, the mantra the whole time of this company is the more the merrier. But management misjudged their new signups last quarter, the key metric for Netflix, and it gutted the stock. If they deliver a better than expected signup number, the stock could rally 50 points. I don't know if they can do it, though. Thursday, we start hearing from the big industrials and the big transports, starting with Honeywell and Union Pacific. Honeywell's been on a tear. It's one of the best performers of the group. Its aerospace business has been a standout. I start worrying. Could Boeing be hurting it? Union Pacific is a great tell if you're trying to gauge our commerce with China. Their trains take goods from California to the east. It's always been a reliable way to gauge China exposure. They also have coal, oil, and auto exposure, though. They're all tough industries. Could be a very challenging quarter. Morgan Stanley stock ran today, too, so be careful. Morgan Stanley sells it around 9 times earnings. This is a premier financial franchise. It's been a consistent earner. That's too low. I think you can buy this stock ahead, maybe on Monday or Tuesday, of when they report numbers, because I expect a good quarter. Friday, I'm looking for excellent results from Coca-Cola and American Express. Coca-Cola is all about plain old good blocking and tackling by management. PepsiCo told us they're taking share. Could Coca-Cola rebut them? Maybe. I think they'll try. As for American Express, I bet the stock will react positively. It's one of my favorites. It's also the one that's the best tell for whether China's serious, because China should let American Express come in without a partner. That would be the key. That's what we want to see. That and the idea that Mellanox will be able to be bought by NVIDIA, which is something that was held up and looks like it might be still held up. Finally, there's Schlumberger. we used to call it SLOB, S-O-B, the oil service giant. You know that this one was one that used to give us consistent upside surprises, but those days are long gone. We still own Schlumberger from Uncharitable Trust, part of the diversity, my attempt to be able to diversify. I'll be talking about it at my ActionAlertsPlus.com conference call next week. I'm going to be talking about how we sold some for a loss. We should have sold it all. Bottom line, with this latest news on trade today, next week is still going to be about China, but not as much, I think. A trade deal, even phase 1 or 2 or 3 of 2 or 3 phases, means we can finally focus on the substance of earnings. And I like that. I'm expecting many of these quarters could be better than expected, certainly better than the media is constantly harping on. Could be a good week as long as Washington doesn't get in the way. Kathy in New Jersey. Kathy!
Hey, Cramer.
Yeah.
I've been an avid Peloton owner and rider for the past 5 years and feel really strongly about the company and where it's going. Of course, the moment the IPO went public, I bought quite a few shares, which I sold the following day after I watched your show and heard what you had to say.
Right.
Jim, I'd like to know when you think it's a good time for me to buy Peloton back.
See, I think Peloton's part of a class of equities, IPO class, that has been basically discredited. And Peloton's got a lot of people who did not, unlike you, flip it. And I feel like that what's happened is that you got a real bad shareholder base. I am not anxious to recommend the stock. There are many companies that have sold off during this period that are much better, including a bank like a Wells Fargo or a Goldman Sachs. And I like those. I'm just picking those because they report next week. But I cannot recommend Peloton. All right, if Washington doesn't get in the way, we could be actually talking about stocks and their earnings. And I think that would drive stocks higher. But I know that's a tall ask, particularly if we get the fine print on China. Mad Money tonight. Wendy's has served up a 20% gain in the past year as it cooks up a plan to add breakfast to the menu, and it just boosted its dividend by 20%. Is this stock just heating up? I'm going to talk to the CEO after its Investor Day. You know that's a Cramer fave. Then looking for a secular story that can work regardless of how the trade talks go? I'll tell you why it may be time to tee up with the golf stocks. And you've probably seen one of this company's products in your dermatologist's office, and you might not even know it's what it is. I'll reveal it, and boy, is it interesting, even compelling, in tonight's homework section. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.